How to use tax planning strategies for maximum savings. Learn how to navigate tax laws and regulations for optimal financial management. Overview. Join us on social networks. Tax management is an essential component that can have a big impact on your overall savings and investment results. The implementation of efficient tax planning tactics is crucial, regardless of whether you are involved in conventional financial markets or are looking at prospects in the cryptocurrency field. This article will discuss important factors for maximizing tax savings in both the traditional financial markets and the cryptocurrency space. Understand tax laws and regulations. Understanding the tax laws and regulations that apply to your investments is the first step in efficient tax planning. This includes comprehending capital gains taxes, dividend taxes, and any related tax credits or deductions in traditional financial markets. Regulations in the cryptocurrency industry are evolving, and local tax laws may differ. Learn about the tax repercussions of investing in cryptocurrencies, including the definition of cryptocurrencies as assets, the need for tax reporting, and any applicable exemptions. For instance, when it comes to accurately documenting transactions involving assets that may result in capital gains or losses, Form 8949 is your go-to resource. This versatile form encompasses a wide range of assets, including digital assets, stocks, bonds, and more. By diligently utilizing Form 8949, you can ensure thorough and accurate reporting of your financial activities while complying with tax regulations. Related, a beginner's guide to filing cryptocurrency taxes in the US, UK, and Germany. Select tax-advantaged accounts. One effective strategy is follow the URL for the full article. For more on this story, visit the news article link.